Hello traders, this is David from Wave Trader. Today I want to show you a trade I'm in currently on gold. As you can see from this chart, this particular trade is it's not the kind of trade that ordinarily a trader would want to be in, but I just want to show you how powerful the entry technique I use is. So let's begin from the monthly chart. Going to the monthly chart, we know that gold has been in a strong bullish uptrend, okay, and in the past couple of weeks it's been retracing a bit, and well, I was actually thinking it was going to retrace down to probably the 55% level of this bull move, but I think it decided to turn at the probably 28% or so. Let me make sure. That's on the monthly chart anyway. So there's still possibility of it going down further. But right now, what we are seeing here is a bullish candle information. Okay, all right. You can see that it nearly got down to the 38%, and sometimes the market will do that. It will just retrace at the 38% level. However, because this is the monthly chart, we'll have to wait and see. But right now, everything points to the trend continuing. MACD is still trending up. Okay, so let's go down to the weekly chart and see what we see. So on the weekly chart, you can see that we are in a fourth wave. Okay, and from experience, I can tell you that trading the fourth wave can be tricky. But because this is a high level chart, you can actually get some moves in. Okay, but you have to be careful, because right now it looks like we have a wave top situation going on here, and you can see that the MACD has crossed, giving us a dead cross. However, I know that this is just a dip, okay, in an uptrend, so don't expect this to go down too much. Okay, even if it's going to go down, worst case scenario, it goes down as low as the 62% region and then continues the upward move. But right now, this is where we are. So I was looking at gold, and I saw that the weekly candle as well was bullish. So going down to the daily chart this morning, I saw what looked like a war zone here. Okay, it's almost I won't say impossible, but it's not a good idea to trade in these conditions. Okay, but because this is still a big time frame, I decided to see what I could see. So now from the daily chart, I began to make some deductions. Okay, because I can see here that we had this, well, call it a downward move. Okay, and price gave us a low here and then went up and came down again, and you can see that this low did not go as low as this, so we have here a higher low. Okay, so that can also be looked at as a wave bottom situation. Okay, it may not develop too much, okay, because until we have what you will construe as a very definitive push up here, we can't really say that gold is about to resume the upward move as yet. Okay, but at least we have a higher low here. Okay, so that gives us the possibility of the market pushing up a little bit, at least probably up to this region of congestion here on the daily chart. So going low to the 4-hour time frame, you can see what's going on. So this is what I did. You can see the low here, and then these two lower points. Okay, both of them higher than here, and this one as well. So if we were to use here as number 1 and this point as number 2 and take our APAC levels, okay, one moment, I have to delete every Fibonacci retracement levels to get the APAC to work. All right, so you see we have price targets up to here. Now I'm not concerned about that right now. I just wanted to use that to show you where the retracement was. So we have the 62% level here, okay? And of course, if we were to mark where the 55% is, it will be somewhere in this region, okay? So when I did my analysis early this morning, I think it was as early as 4 a.m. because I was awake. 4:30 a.m. West African time. So I did my analysis as at that time the market was trending in this region, okay? It was somewhere around here. Okay, so I did this and then I went low. Okay, so all right, the market was still hovering in this somewhere in this region. I now determined that worst case scenario, it doesn't come down, okay? But still, just to test the technique, you can see here a 0.01 micro lot order because I placed it as a buy limit, right? I placed it at 14. Let me check. 1485.65, okay? 1485.65, and I just left it. All right. So when I eventually got back and I checked my system during the day, I saw that the market had actually filled me in and was trending strongly upward. So because I predominantly like to swing, I wasn't on my system when this happened, because if I had been on the system, let's go down to the 15-minute chart. Okay, so if I had been on the system, what I would have done here was to put in maybe a 2-lot order. Okay, so as at the time I came in, you can see that the market had gone up a ways. Okay, so I still put in my 2-lot order, and you can see this is what the market is doing right now. So it went up and came down, gave me a small drawdown, and it's doing this right now. Anyway, today is Friday, so I don't expect much to happen again, but I'm going to leave it over the weekend, okay? Which of course is not always a good idea, but I have, because this trade it's actually an ugly trade. I will not call this a textbook definition of what a wave trade should be, but this is how you develop as a trader, okay? You have to take the good with the bad so that you can learn and you can grow. Now on the 15-minute chart, we can see that we actually have another wave bottom situation with here as number 1, this point as number 2. So if we were to take our levels now, we have price targets going up here. So we'll see what we'll see by Monday, okay? But right now, I moved my stop to protect just a little bit of profit. It's just just $3.6. It's not about the profit right now. It's just so that I will not lose out entirely on the trade, okay? Because the real profit would have been from here. So what I wanted to show you is not the fact that I made profit, but the fact that the 55% retracement works even in an awkward situation like this, because you can see that this is not, it's an uptrend, but it's a squiggly uptrend, okay? This is the type of uptrend that can knock you out, but still the entry technique works like a charm. And for those of you who are not familiar with it, what I advocate is when you place your entry orders, place an entry order of a micro lot or so, and then once the market moves in your favor by a couple of pips, by about 5 to 7 pips, you can go in with your normal lot size that you trade for that for the risk management that you are employing. So that's just what I wanted to teach in this video, and I hope that you learn from this. The market seems to be gaining a little bit of a push here, so let's see how it goes by Monday. So happy weekend, traders, and thank you very much.